All right, everybody. So let's just review the market and all of that, see what the hell's going on. All right, so starting with the futures, nat gas and Bitcoin. So we'll just be taking a look at those that market. Nat gas and Bitcoin. Nat gas worked like a perfectly pulled back and just exploded. Exactly what I was expecting. What? Okay, and Bitcoin, as you know, has gone crazy, and I identified that some time ago. I'm not sure if it was before or after the gap up, but in any case, it's nat gas, Bitcoin, and crude, and then the weakest are bean oil and I think that's palladium, and then bonds. But this is where the money's is. This is where the money is. So one of the first steps in selecting a market to trade, once you have your execution methodology and know exactly what you're doing in terms of executing, how to enter, how to exit, how to take stops, all that, then what you want to do is just jump into the markets where the money is flowing, especially on the long side, and just try to buy pullbacks that are easy pullbacks. Anyway, so where the higher highs, holy shit. Nat gas makes 191-day not higher high, and this one gold 64-day higher high. So this, there's a couple of ways to identify where the money is going, right? One is obviously relative strength, but relative strength depends on the period, in X number of days. The other way to do it is just higher highs and lows. Price is going up, people are buying. Price going down, people are selling. So this is where the money is. All right, the flow of money, the freight train is right here on nat gas, gold, and I think that's soybean meal, and then after that copper, and then let's take a look at the losing. Yikes! This is pretty bad. entire, entire whatever complex, the index is in big trouble. RTY is the weakest, followed by, so small cap, mid cap are the weakest. All right, moving on to the other markets. There's really nothing else to see. I mean, this is what you need to know. You need to know where the money is and on the long and the short side. So here's nat gas and Bitcoin, and using higher highs and low lows, it's nat gas, gold, along with Bitcoin, and then you have this this entire complex being weak, indexes being weak. All right, I mean that's the gist of it. Now let's take a look at the ES and crude. There's something I found in the ES which is really important. After the shortening of the thrust and the selling and all of this and that, and did all of this, and it had that 102 up wave, and then it broke the low. But what I'm not understanding is why is market breadth not breaking? You had on that up wave, you had heavy, this is a change of behavior up buying wave. In the internals clearly show buying, hell lot of buying in the NASDAQ and the New York Stock Exchange, both 1,800 stocks, boom, right here, 1,700 stocks. And the initial pullback is only 800, the secondary pullback was 15, followed by 1,400 up. So if this thing holds, it's going to be in a springboard position, and the market's going to reverse. So I don't know what's going on, but there's something not right about this move down right here from this low. Something not about it, the way it's making low lows, and it didn't make low lows on the breadth indicators. On the internals, you can clearly see buying, and it holds. This is really important. I can't express to you how important this is. It's that important, because what happens in downtrends is this is actually what happens. In downtrends, you'll have the market or future going down, but breadth is not supporting it. So what happens is a reversal occurs. And this is that situation where I just need one more pullback to see if it holds. If the NASDAQ and the New York Stock Exchange hold on the pullback and it's light volume, it can set up a major reversal. So that's only a potential scenario. It has to happen. The other scenario is that, hey, the market starts participating on the downside, they take out the lows. So we'll see if this is some type of year-end reversal to the upside that's setting up right now as we speak. So. And then on Friday's action, what happened here? So market, it went on pullback position here, and then pullback position here. It was in pullback position here, right? That's the pullback, PB, pullback, rally, pullback, right? Typically, there are two pullbacks before a break. I mean, I don't know why that. Actually, I do know why, because they're setting up the distribution. So you had, the market goes down and pullback 1, pullback 2. So it's pullback, and then the selling. And that initiated the change of behavior right here, which set up the pullback to test and then continued lower. And that's the trade, right? So it goes into pullback position, and then it breaks down. Now, obviously, if you guys are using higher time frames, that's fine. The key is to be able to identify the structure on higher time frames and support and resistance levels, and then just go on a lower time frame and see if there's heavy buying or selling, however it is that you measure it. You can measure it from volume, you can measure it from big ranging bars or big waves or whatever, or trend shifts, whatever. So you can very clearly see the market rallied. First of all, you know that the daily right here is in a downtrend. And as it's in a downtrend, it rallies down, pullback 1, then pullback 2. On the pullback in a resistance area. Remember, in a resistance area, then the selling comes in with a change of behavior, with the biggest volume, and not the biggest volume, but bigger than 3.79 times the ratio. Now that's probably because it's the open that the ratio is so high, but whatever. Look at the sellings, 46,000 contracts. Then after that, later on, after the open, 224,000 contracts. 224,000 contracts. It's clearly setting up to sell. And then they always do this shit, which is down, up, down, higher high. The higher high, full test, possible up thrust, and down she goes. So this is very, very common. Before the markdown, before the markup, there's a spring. Before the markdown, there's an up thrust. This is very common behavior for the ES. If you all know, you know that it likes to do this. It likes to make a lower low, then make a higher high, and then break, right? So this is the directional move. It rally, pull back, boom. It proves that the market can trade lower. It proves that the market can trade lower. After that, it does a stop run as well as some distribution. Why? Because there's sells here, get them, and go. All right, so this is important to understand this situation. That's why if you stops over here, you're gonna get taken. So anyway, so have a good day. Bye-bye.